Hello students, good morning students. Now it's time for your accounts class, and you know that we are on the section partnership, and under the partnership already done chapters like fundamentals, admission, retirement. Now we are going to start the new chapter of this series, that is dissolution of partnership firm. So know about what is dissolution. For this, first of all, learning objectives, meaning of dissolution, modes of dissolution, difference between the dissolution of firm and dissolution of partnership, settlements of accounts on dissolution and realization account. So first of all, see the all key terms. Number one, partnership. You know that partnership, there is an agreement between the two parties. So here, like example, Simran and Anmol started a business of computers and they will share profits in the 1:1. So here two partners available, one Simran and the second one Anmol, and started one computers business with the share equally. The relation between the person who have agreed to share the profits carried on by all or any of them acting for all. Now the next term, partnership deed. You know that without any partnership deed, you are unable to start any partnership firm. So first of all, sign one partnership deed. Like example, Amit and Sumit will share in the ratio of 3:2. So here the partnership deed signed and the ratio divided among the partners Amit and Sumit 3:2. The written agreement between all the partners describing their rights, duties and responsibility called the partnership deed. So under the partnership deed, all the rights, all the duties and responsibility fixed. The next key term, dissolution of partnership firm. So simply closing down the firm as a whole is considered a dissolution. Simply wind up when in future the partners are not ready to continue the business. Means putting an end to a partnership between all the partners. The next key term, realization account. A realization account is open for disposing of all the assets of the firm and making payment to all the creditors. So here disposing simply means that sell all the assets and pay all the liabilities. And it is a nominal account. So why here written? It is nominal account. The only reason you know that the rules are debit all expenses and losses, credit all incomes and gains. So here all the expenses, gains all available, and its objective is to find out the profit or losses to loss on realization of assets and liabilities. So it deals with the profit or loss. That's why it is considered as nominal account. And here the main point, dispose of all the assets and making payment to the creditors. Next term, workmen compensation reserves. For the workers, one reserve created already by the firm. This reserve is created out of the profit of the firm to meet the claim for compensation by the workers. So the next term here is unrecorded assets. So unrecorded, which is not yet recorded in the accounts book, okay, but exists, is called unrecorded asset. You know that workmen compensation is provided to the workers in case of accident, in case of death, in case of any injury, and unrecorded asset which is not recorded. Unrecorded liabilities, which is not recorded in the books of firm but is payable. Yes, not recorded, but it's a liability of the firm to pay, is known as the unrecorded liabilities. Now the introduction. Dissolution means the termination or winding up. Simply termination or winding up is considered as dissolution. Dissolution takes place due to the following two main reasons. So what are the two main reasons? Firstly, due to the dissolution of a partnership because of the retirement, death or insolvency of the partner. So here are three reasons provided in case of retirement of any partner, in case of death and insolvency of the partner. Partner is not now able to pay the debts. Secondly, due to the dissolution of the firm. So number of reason for dissolution. Now as per the section 39 of the Partnership Act 1932, dissolution of partnership among all the partners of the firm is called the dissolution of firm. So under Partnership Act 1932, among all the partners of the firm is called dissolution when all the partners sometime agree, sometime by law. Number of reasons for this dissolution. Meaning of dissolution first of all, then I will explain you the reason for dissolution. So first of all, know about the meaning. Dissolution of partnership, the business of the firm comes to an end and there is a complete breakdown of partnership. So here it is totally a complete breakdown of partnership. No any partnership deed after the dissolution of the firm among the partners. Now dissolution of partnerships. So here the point, only dissolution of partnership, not firm. Here word not firm used. May not necessarily end the firm, but may bring changes in the relationship of the partners. In such a cases, the partnership among the partners terminates, but the reconstituted firm continues with the same name. So here the difference, if dissolution of the firm and if dissolution of partnership. So two different things. Firstly, dissolution of partnership firm means comes to an end, business, no any relation between the partners. In case of dissolution of partnership, simply your deed changed. Okay, and sometime with the same name, the future partners continue the business. The modes of dissolution. So partnership rules and regulations. Various modes of dissolution are dissolution by the agreement, compulsory dissolution, contingent dissolution, dissolution by notice, and dissolution by court. So these all are the reason modes available. Number one, reason for the dissolution of a partnership firm as per Indian Partnership Act 1932, dissolution by agreement. So under section 40, a firm is dissolved in the following cases. So according to the agreement, when all the partners give consent to dissolve the firm. So here when all the partners give the consent to dissolve, to wind up the business. And the second, by means of a partnership agreement among the partner, already in the agreement written, after 5 years, after 10 years, dissolved. Next, compulsory dissolution. So section 41. A firm is compulsorily dissolved in the following cases. So the cases here, when all the partners or except one becomes insolvent or of an unsound mind. So simply, if any partner insolvent except one and unsound mind, simply not mentally normal, then in this case also wind up of the business. When next point, when the business of the firm becomes unlawful, you are not working according to the law, then in this case also compulsory dissolution. Third point, when all the partners except one retires from the firm, all the partners, like 3 partners who retire, then in this way also compulsory dissolution, because only one can't exist, one can't continue the business. Next point, when all the partners or all except one partner dies. These all are the reasons for compulsory dissolution. The next point, contingent dissolution. Section 42. Subject to the contract between the partners, a firm is dissolved under the following circumstances. So the circumstances available, number one is by the expiry of the term of the contract for which the partnership firm is formed. So after the expiry, contingent dissolution. By the completion of the venture for which the firm is formed, like just for one project partnership deed you all as a partner signed. In this case also dissolution by the death of any partner, by the insolvency of the partner. These all are the reasons for contingent dissolution. Now dissolution by notice. Section 43. In case of partnership at will, the firm is to be dissolved in case if any one partner gives notice in writing to all the other partners of his intention to dissolve the firm. So when the notice is provided to all other partners to dissolve the firm and comes under dissolution by notice. Dissolution by court. Simply by court, the order provided to dissolve the firm. Like here, the first point, partner becomes of unsound mind. Partner is unable to perform his duty, and if the partner intentionally and continuously commits breach here is an act of breaking of an agreement, continuously, intentionally, relation to the firm management. So these all are the reason. Number one reason for by court dissolution. Number one, becomes in unsound mind. Second one is not performing the duty according to the standard set. Third one is intentionally breach the contract, breach the agreement. Partners' activity is likely to adversely affect the business of the firm. So if the partner's activity negatively affects the business, then under this circumstances, the firm dissolved by the court order. Now the next point is difference between the dissolution of firm and dissolution of partnership. So here two different concepts available. One is dissolution of firm, second one is dissolution of partnership. So see students, dissolution of partnership and dissolution firm. Firm means simply wind up of business, no any relation between the partners after that, but in case of partnership only your deed comes to an end. Okay, wind up. The business of the firm does not come to an end. Yes, in case of partnership, deed only. If deed dissolved, it means that no your business not comes to an end. But in case of dissolution of firm, the business of the firm comes to an end. Second, settlement of assets and liabilities. Revaluation of the assets and liabilities take place and a new balance sheet is created. So simply in case of change of partnership deed, your assets and liabilities revalued, a new balance sheet created. But in case of dissolution of firm, sale of all the assets and disposal of the liabilities is executed. So the difference here is in case of dissolution of partnership, revaluation account prepared. In case of dissolution of firm, you sold all the assets and pay off the liabilities, and one account is maintained here. Consider the name of the account is realization account. The next point is dissolution. Partnership is dissolved by mutual assistance. So here the point is partnership is like suppose if three partners available in the partnership firm and all are mutually decided to dissolve the partnership deed, okay, then only it is possible. And in the dissolution of firm is dissolved by firm's order. Books of accounts are not closed, and in case of firm, totally closed. Next, relationship among the partners does not come to an end. So here relationship not comes to an end, but in the case of dissolution of firm comes to an end. These all are the point, the difference between the dissolution of partnership and dissolution of firm. Now the settlement of accounts on dissolution. So what are the settlements here? Following rules of section of 48 of the Indian Partnership Act 1932, which deals with the modes of settlement of accounts on the dissolution of firm shall apply. Number one, losses including the capital deficiency are paid off out of the following: paid off out of the profits, out of the capital and private property of the partners in their respective profit sharing ratio. So sometimes the private property of the partner also used till the liability of the partner. Now the next point, money realized from the sale of asset is applied as follows. So if after the sale you received any money and that money is used for payment of realization expenses, Payment of external liabilities like to pay the bank loans, pay the money to lenders, to any third party. Payment of loans given by the partners, payment of capital contributed by the partner, and any surplus left after meeting the claims of the partner are shared by them in their profit sharing ratio. So after all expenses when you paid, at the end, if any surplus, that is distributed among the partners in the profit sharing ratio. Now, realization account. The realization account is open for disposing of all the assets of the firm and making payment to all the creditors. So it is a nominal account, already discussed. So guidelines given for preparing the realization account. What are the guidelines? Number one, loan given to a partner will be transferred to his capital account. So the loan given to any partner simply transferred to the capital account, and bank overdraft is to be transferred to realization account. It is negative bank balance to be shown on the credit side of the bank account. Yes, you know that bank overdraft simply the negative amount and you just transfer it to the realization account. The third point is bank loan must be transferred to the realization account. Next point is partners' current account balance are to be transferred to the capital account. No adjustments are required to be passed through the current account. So these all are the guidelines. If the question is silent about the realization of an asset, it is assumed that the asset has not realized any amount. Simply, if in the question written not written about the realization, it means that the asset has not been realized any amount, means zero value, no any amount released with the help of assets. Next point is if the question is silent about the payment of a liability, it has to be paid out in full. Yes, if in the question not written to pay off the liabilities, like to pay the credit to the creditors, to pay the loans, but still it's your responsibility to pay the full amount, to settle the full amount. The next guideline, loan taken from the partner will be passed through the cash or bank account. These all are the guidelines to prepare the realization account. Students, now accounting entries. So practical point here, journal entries. For transfer of asset to realization, firstly you are going to transfer the assets, and the first entry, realization to assets, all individual asset, book value. Record the amount at book value. Second, journal entry for sale of disposal of assets, when you sold the goods, when you sold the assets. So in this case, what you received cash, that's why cash account debited to realization account. The next point is for any assets taken over by the partner. So any asset taken by the partner, partner's capital account, debit the receiver to realization account. These are all are the journal entries. Now the next, for sale of unrecorded liability, unrecorded assets, sorry. So in this case, any unrecorded asset, so you receive the money, so here cash account debited to realization account. For any liability assumed by the partner, so here assumed by the partner, if paid by the firm then to simply to cash, but here assumed by the partner, so right here to partners capital account. Clear? Now the next point is for payment of realization expenses, any expense incurred during the realization. So here realization account, what goes out? Cash, that's why to cash account. These all are the journal entries. For profit on realization, any profit on realization, your entry here is you are going to distribute the profit among the partners in profit sharing ratio. Realization account debited to partners capital account. For repayment of loan advanced by a partner, in this case partners loan account to cash. Okay, here you paid the loan to the partner, so that's why what goes out? Cash goes out, cash account credited. For transfer of undistributed profit reserve, etc., how to transfer profit and loss account, reserve account to partners capital account? Simply transfer it in the profit sharing ratio among the partners. For settlement of the partners capital account, so here the entry, partner's capital account to cash. Here you settle the accounts of the partner. It means you provided the money at the end, at the wind up, when you simply stop the business. Okay, these all are the journal entry. Now practical problem C. The number one problem here is realization expenses amount to rupees 10,000. Simply see students, here 10,000 paid. What goes out? Cash goes out, and debit all expenses, and your expense is realization expense. Realization account. So debit realization account with the amount 10,000 to cash 10,000. This first journal entry being the dissolution expenses paid. The second point is realization expenses amounted to rupees 5,000 were paid by partner. So here partner paid. To simply write down realization account to partner's capital account, no to cash. If paid by firm, then only you just write to cash. Being the dissolution expenses paid by the partner credited to his capital account. Now the next, realization expenses amounted to rupees 5,000 were paid by firm on the behalf of partner. So here firm paid. So simply write partner's capital account to cash on the behalf of partner. See the difference between the first and third entry. In this case, totally firm paid, but in the third entry on the behalf of partner paid. Who's liable? Partner's capital account. That's why here debited to cash. But in case of firm, realization to cash. The next point is a partner was paid remuneration including the expense of 7,500 to carry out the dissolution of the firm. Actual expenses were 10,000. So here the remuneration of the partner. So realization to partner's capital account 7,500 transferred remuneration, being the remuneration to the partner's credited to his capital account. So the next entry, students, dissolution expenses were 8,000 rupees, 3,000 were to be borne by the firm. So out of the 8,000 total expenses, only 3,000 borne by the firm and the balance by the partner. Balance 8,000 minus 3,000. Simply 5,000 left. The expenses were paid by the firm. All the expenses paid by the firm. So that's why to cash bank account 8,000. Realization expense because by firm only 3,000 and rest 5,000 by the partner. So that's why partner's capital account. Being the dissolution expenses paid by the firm, firm's share of expenses debited to realization account and balance to the partner's capital account. The next point is realization expenses of rupees 5,000 were to be borne and paid by the partner. Both borne and paid by the partner. That's why not to cash account to be credited, only realization account to partner's capital account with the amount 3,000. Okay. And the next point is, so here students, your one entry, fifth entry is divided into two parts. One is 3,000 amount of partner and one is 5,000. And the next entry regarding this is X the partner is paid remuneration of rupees 5,000 for dissolution of the firm. Realization expenses of rupees 8,000 were met by the firm. So see the situation. Firstly, X the partner is paid remuneration of rupees 5,000. Who received 5,000? X the partner. Okay, and realization expense 8,000 met by the firm. So in this case, first of all, remuneration case, realization to X capital account 5,000 received by the partner. The next, the expenses paid. So that's why realization account debited to cash with the 8,000. The next point is realization expenses 5,000 were to be borne by X, a partner. However, it was paid by Y. Who borne? X, the partner. The different partner Y paid. And the entry for this, X account debited to Y's capital account 5,000. Being the realization expense to be borne by X, paid by Y. Now this one is the format of realization account. See, firstly record all the assets Here debit side with the book value, and all the credit side, all the liabilities with the book value. And after that, when you received after the realization of assets by bank cash account, land, plant, furniture, stock, debtors, and in this way while paying the liabilities to bank cash account, sundry creditors, bills payable, outstanding expenses, bank loan, etc. Clear, students? So here realization expenses to bank paid, and the entry here realization expenses to bank by partners. Any partner taken asset, take over the assets. So in case the loss distributed among the partners, so credit side, and if profit distributed by the partners, then in the profit sharing ratio, debit side. So this one is the full-fledged structure of realization account. And your homework question, students: what is meant by dissolution of firm? What is realization account prepared? Why is realization account is prepared? And what is the nature of realization account? What is meant by dissolution by notice? What is meant by the partnership at will? Distinguish between the dissolution of partnership and dissolution of partnership firm. Explain the circumstances under which a firm is dissolved. How will the firm record the payment of realization expenses which were to be borne by the partner but paid by the firm on his behalf? Next question: difference between the revaluation account and realization account, and must solve the practical problem sum number 1 till 10 plus related illustration. And students must watch the YouTube links for more better understanding of this topic, and prepare your notes properly, students. Okay, thank you so much for watching the video.